Well, folks, the results are in, and it's safe to say that very few saw this coming.
Donald Trump is going back to the White House.
Wow.
It is November 5th, 2024, and we are here to unpack what this very unexpected turn of events means for your investments. You wanted the inside scoop,
Yeah.
and that is exactly what we're diving into today.
It's fascinating what we're seeing because even though some analysts did predict this outcome,
Right.
the markets are reacting with a noticeable jolt.
Yeah,
It really just underscores how closely politics and economics are really intertwined.
absolutely. So let's go beyond those headlines. What are we seeing in terms of immediate market reactions and what's driving them?
One of the most prominent trends is a surge in oil and gas stocks. And this aligns with the investor optimism outlined in our source material, particularly around Trump's anticipated pro-energy policies.
Okay.
It's not just a general sense of optimism, though. Investors are betting on concrete policy changes. That makes sense. And our source specifically mentioned increased optimism around deregulation and expanded drilling access. So could you elaborate on how these factors are influencing investor sentiment?
Certainly. One key area to watch is federal lands. During his previous administration, Trump opened up vast areas of federal land for oil and gas exploration.
Right.
Investors are likely anticipating a repeat of that approach, which could translate into increased production and profits for energy companies.
Interesting. So it's not just about less regulation in the general sense, but about specific policies that directly impact the industry's ability to expand.
Precisely. And another factor is streamlining permitting processes. Obtaining permits for drilling and exploration can be a lengthy and complex process.
Oh, yeah.
If the Trump administration streamlines those procedures, it could significantly reduce the time and cost involved in bringing new oil and gas projects online, which is a major plus for energy companies.
Okay. I see how those factors are driving investor confidence in the energy sector.
Yeah.
And we're also seeing this reflected in the futures market for oil as well, right?
Yeah.
It surged post-election.
Exactly. Futures are essentially contracts to buy or sell a commodity at a specific price on a future date.
Okay.
The surge in oil futures indicates that traders anticipate higher oil prices in the coming months, likely due to the policies we just discussed. It's an early barometer of market sentiment, and right now it's pointing upward for oil.
So for our listener who may be wondering, okay, what companies are analysts looking at?
Right.
Let's delve into some specifics.
Yeah.
And of course, remember, this is for informational purposes only and not financial advice.
Of course. One company that's attracting attention, as highlighted in our source material, is BP British Petroleum. Given the anticipated increase in drilling and exploration, BP, with its extensive global operations, stands to benefit significantly.
And this is where it gets interesting for you, the listener. If you hold any energy stocks in your portfolio, this upward trend might bring good news. But always do your own research before making any decisions.
Absolutely. Now, shifting gears from the energy sector, our source also spotlights Goldman Sachs and the financial industry. This isn't surprising, as business-friendly administrations often lead to increased activity in finance. We could see a surge in mergers, acquisitions, initial public offerings,
Right.
areas where a firm like Goldman Sachs thrives.
That makes me wonder, are there any specific policies on the horizon that could be driving this anticipated financial boom?
One area to watch is deregulation. Trump has previously advocated for rolling back financial regulations, and investors may be betting on a similar approach this time around.
Yeah.
Less regulation can make it easier for companies to merge, raise capital, and engage in other financial activities, which could benefit firms like Goldman Sachs.
I see. So it's not just a general sense of optimism about the economy. It's about anticipating specific policy changes that could directly impact the financial sector. And speaking of policy changes, we can't talk about a Trump win without addressing, well, the Trump factor.
Yeah.
Our source mentioned Digital World Acquisition Corp., or DWAC, the company tied to Trump's social media platform.
Right, and this is where things get a bit more speculative. DLEC's value is closely tied to Trump himself. And as we know, he's a highly polarizing figure. This stock could skyrocket based on positive news or plummet just as quickly if things take a downturn.
Volatility seems to be a constant companion
Yeah.
where Trump is involved. Now let's turn our attention to a market known for its wild swings, cryptocurrency. Our source suggests Bitcoin could see a major surge under a less regulated environment.
Okay.
What are your thoughts on this prediction?
Well, while a less stringent regulatory approach might seem beneficial for crypto on the surface, remember, this market is notoriously unpredictable.
Right.
While the potential for a surge exists, it's crucial to approach such predictions with healthy skepticism.
So maybe hold off on putting all your eggs in the Bitcoin basket just yet. Are there any particular companies in the crypto world worth keeping an eye on as this situation unfolds?
Our source mentions Coinbase and BlockFi as potential beneficiaries if the predicted Bitcoin boom materializes. Remember, this isn't a recommendation, just an observation based on potential trends.
Information is power, but the listener needs to determine how to utilize it best. Now let's zoom out from specific stocks and look at the bigger picture. The overall economic trends a Trump presidency might bring. And as our source emphasizes, we don't have a crystal ball here.
You're absolutely right.
Yeah.
But by examining historical patterns and potential policy directions, we can make some educated guesses.
Mhm.
One area to watch closely is inflation. The source suggests that Trump's policies, particularly if they involve significant spending, could lead to increased inflationary pressures.
Okay, so let's break this down for our listener. How would rising inflation impact their daily life?
Simply put, imagine paying more for everyday essentials like groceries, gas, and utilities. That's the direct impact of inflation on your wallet.
Yeah.
It erodes your purchasing power, making it harder to maintain your current standard of living.
So interest rates are often viewed as a tool to manage inflation. Can you walk us through how rising interest rates might impact investors in practical terms?
Of course, interest rates have a ripple effect across the entire economy, affecting everything from mortgages and car loans to the returns on your savings. If inflation rises, central banks, like the Federal Reserve in the U.S., often raise interest rates to try to cool things down.
Right.
This can impact investors in a few ways. For one, borrowing becomes more expensive. Higher interest rates mean higher costs for mortgages, business loans, and other forms of debt. This can slow down economic growth, which can negatively impact company profits and stock prices. On the flip side, higher interest rates can also lead to higher returns on savings accounts and bonds. So there's a potential upside for some investors.
That's a lot to consider. It's certainly not a straightforward equation. And speaking of complex scenarios, our source also hints at potential shifts in global trade relations under a Trump administration. Trade is a topic that often feels distant and theoretical. But you bring up a crucial point. It has very real consequences for consumers. Can you elaborate on how potential shifts in trade policies could impact the listener's daily life?
Absolutely. Think about the products you buy regularly: electronics, clothing, even groceries. A significant portion of these goods are imported, and changes in trade deals can directly affect their prices and availability.
Right.
For instance, if tariffs are imposed on certain goods, those costs are often passed down to the consumer in the form of higher prices.
Yeah.
Or if trade relations with a particular country deteriorate, we might see shortages of specific products that rely on imports from that region.
That makes it much more tangible. So it's not just about abstract economic indicators. It's about the potential impact on the things we buy and use every day.
Exactly. And here's where things get particularly interesting with the Trump presidency. He's known for favoring protectionist policies which aim to protect domestic industries from foreign competition.
Right.
This could mean tariffs on imported goods, renegotiation of existing trade deals, or even withdrawal from certain international agreements.
I recall the trade wars during his first term. There was a lot of back and forth with China in particular. How might a protectionist approach play out in the current global landscape?
That's the million-dollar question. The global landscape has shifted significantly since Trump's first term. We have rising economic powers like China, ongoing geopolitical conflicts, and the lingering effects of the pandemic, all of which add layers of complexity.
Yeah.
Predicting how a Trump administration will navigate these intricate trade dynamics is difficult, but it's certainly an area worth watching closely.
It sounds like there's a lot of uncertainty surrounding trade policies, which adds to the overall sense of unpredictability we've been discussing.
Yeah.
It can feel overwhelming for investors trying to make sense of it all.
I understand that feeling, and it's important to acknowledge that no one has a crystal ball. We can't predict the future with certainty. However, that doesn't mean we're powerless.
Right.
The goal is to understand the potential scenarios, the key drivers at play, and the questions we should be asking as events unfold.
So for our listener who's trying to navigate their investments in this post-election world, what are some key takeaways or guiding principles they can keep in mind?
First and foremost, stay informed. Keep an eye on policy announcements, economic indicators, and global events that might impact the market. Don't just rely on headlines. Dig deeper to understand the nuances of the situation.
That's great advice. It's easy to get caught up in the emotional roller coaster of the news cycle, but taking a step back and really understanding the underlying factors is crucial.
Absolutely. Another important principle is diversification. Don't put all your eggs in one basket. Spreading your investments across different asset classes, sectors, and geographic regions can help mitigate risk. If one area of your portfolio underperforms, others might help balance things out.
Diversification is a classic piece of investing advice, But it's especially relevant in times of uncertainty, wouldn't you say?
Precisely.
Well,
And finally, remember that investing is a long-term game.
yeah.
Don't panic and make rash decisions based on short-term market fluctuations.
Right.
Instead, assess your investment goals, risk tolerance, and time horizon, and make adjustments accordingly.
Solid advice. Now, before we wrap up, I want to circle back to something you mentioned earlier, historical patterns. Did we see similar market reactions during Trump's previous presidency that might offer some insights into what we might expect this time around?
That's an insightful question. And yes, there are some interesting parallels. During Trump's first term, we saw a significant boost in the stock market, particularly in sectors like energy and finance, which aligns with what we're seeing now. However, it's crucial to remember that context matters.
Okay.
The global economic landscape was quite different back then. We weren't grappling with the pandemic, and the geopolitical dynamics were different.
So while history can offer some clues, it's not a perfect predictor. We're in uncharted territory in many ways.
Precisely, and that's what makes this so fascinating. We're witnessing history unfold in real time, and the economic implications are only beginning to reveal themselves.
It's both exciting and a little nerve-wracking, isn't it?
I'd say that's a fair assessment, but ultimately I find it invigorating. It's a reminder that the world is constantly changing, and as investors, we need to adapt and evolve along with it.
Well said. Okay, we've covered a lot of ground today. Market reactions, potential winners and losers, the broader economic picture, and the ever-present element of uncertainty. Before we let our listener go, we want to leave them with something to ponder, a final thought to spark further exploration.
If we look back at our source material, one thing that stands out is the emphasis on traditional energy sources like oil and gas.
Okay.
This raises a crucial question for long-term investors. What does this potential shift back towards fossil fuels mean for the future of renewable energy?
That's a big one.
Hmm.
We've seen tremendous momentum in recent years towards sustainable investing, with many people shifting their portfolios to include companies focused on renewable energy and green technologies. How might this election result impact that trend?
That's the key question. Those investments haven't vanished overnight,
Right.
but this election result undoubtedly adds another layer of complexity to the equation. Will a Trump administration prioritize traditional energy sources over renewables? How will this impact government funding and incentives for green initiatives? And perhaps most importantly, how will investors respond?
Will they double down on their commitment to sustainable investments? Or will they shift their focus back to more traditional energy companies? These are questions with far-reaching implications, not just for individual portfolios, but for the future of our planet.
And they highlight a crucial aspect of investing that often gets overlooked, the role of values. It's not just about maximizing returns, it's about aligning your investments with your beliefs and the kind of world you want to see.
That's a powerful message. So to our listener, we encourage you to continue your own research, stay informed, and engage in these critical conversations. Remember, this is just the beginning of understanding how the 2024 landscape will unfold.
And perhaps even more importantly, consider the role you want your investments to play in shaping that future. Do you want to support companies that align with your values even if they face potential headwinds in a changing political climate?
Right.
Or are you solely focused on maximizing returns regardless of the broader implications?
Those are tough questions, but they're ones we all need to grapple with as we navigate this new reality. Investing is more than just numbers on a screen. It's about participating in the story of the world, for better or worse. And that story is constantly evolving. Today it's about a Trump victory and the impact on your portfolio.
Right.
But tomorrow it'll be something new.
Exactly.
Key is to remain curious,
Okay.
stay informed, and stay engaged.
Well said. I think we have to embrace the dynamic nature of the markets and the world around us.
I couldn't agree more. A huge thank you to our expert for breaking down this complex landscape with such clarity and insight.
My pleasure. Always a stimulating conversation.
And to you, our listener, thanks for joining us on this deep dive into the potential financial ramifications of a 2024 Trump win. Remember, the information we've shared is just the beginning. Your journey continues as you take these insights. Do your own research and make informed decisions that align with your individual goals and values. Until next time, keep exploring, keep learning, and keep diving deep